Hello everyone, myself Vaibhav. In today's session of Visual JForex, I will be explaining to you the use of indicator block named volume. This is a much used indicator and I hope you might be even familiar with it. In today's session, we will see how we can utilize this indicator and design and develop the automated algorithm using the Visual JForex platform. So here you will find this indicator listed amongst the volume indicators, and as the name suggests, we basically see what is the amount of contract lots or units for the given instrument which are being traded for the given period of time. This is the Visual JForex board developed by Dukascopy Bank SA. Here you will find this volume indicator block for which we have to customize these three input parameters. Depending on that, you will have the output value. Then the output value can be utilized to set the conditions for the execution of the trades. And this is always up to us. We have to find out the possible profitable combination and then go for it. So for today's session, we will use the on candle as our initiation point. Any of the three can be utilized to that end. And for example, it's not kind of mandatory. You can use any of the three. And I had in my session also explained to you the difference between these three start points. So I will not really go into the details of those now. Now coming to the volume indicator, its functionality. As I said, it's fairly easy to understand. All we do is see how many contracts, how many lots, or how many units of the underlying instrument. It can be anything. It can be a forex instrument. It can be a CFD instrument. It can be a stock. And depending on the instrument, you have to figure out what is the unit for that indicate instrument and then see how much is the volume. If there is substantial increase in the volume and also the price momentum is shifting gears. If we see that the volume is increasing and at the same time the price is jumping or there is a breakout on the either side, it can be bullish or it can be bearish. So there is nothing on the price front which we have to be particular about. We can trade on both the sides. We can go for buy trades, we can go for sell trades using this volume. All it gives you an idea that there is more interest if there is spurt in the volume compared to the prior period, and now this might be the something of a development which might have an impact for the next period of time, and this might be the time to get involved for the trading opportunity. Here you will see that this was the time when we had a monetary policy announcement coming in from the ECB and then the press conference. And as you can see, the volume was pretty higher compared to the prior sessions time. Here we have this plotted volume data, and as you can observe, after this monetary policy announcement was made, the volume shot up, and at the same time, the price also shot up. And if any of you had seen this, you might have figured out that there is renewed interest and the momentum is on the upside. So this might be the time to get involved for the buy trade. And if you had gone for that, you might have made decent amount of money. Of course, after the interest went and the price stagnated, you might have even gone for the profit booking. So we can utilize these instruments and the indicator to see what is the driving force behind it. If there is more interest for any particular trading direction, if we see that price is falling and at the same time the volume is going up, that means more and more people are looking for shorting opportunities, going for the short sell trade, and this might be the time where the price takes a dive and we should be looking for the sell trade. Then eventually the interest rise up and we see this volume dropping, and at the same time the price stagnates, and then After some time, after consolidation again, the buying interest comes in on the renewed upper side momentum. So we can use these both the price points as well as the volume data in conjunction with one another and try to figure out what's happening, whether the momentum is bullish or whether the momentum is bearish. And at the same time, we compare it to the prior period of time and see if there is more interest, more turnover, more volume than usual, and what can be the reason behind that spurt in volume. So we can utilize this to give us an informed scenario to go for a fresh trade, and to that extent this is an very useful indicator. And just like the case of other indicator, we can utilize the time period of our choice. The period of candle can be changed. Suppose if you want to work with the medium to longer term, then the 4 hourly or daily time frame will serve you better. So this is the daily time frame chart for the USD, and as you can see, the volume in recent times have been a lot higher, and that is clearly visible from the chart. And here, this consolidation phase also had a high volume, and eventually we had the break above it. Now the volume is dipping, as you can see that after these gains, we are not really seeing big volume in the USD's daily time frame chart, and this might be the indication that many people think the rally has been quite red hot, and this might be the time it might cool off to some extent. So the interest is waning, and we will have to see how the Euro USD will behave after reaching these heights. And as I said, we can use data in conjunction with one another. So we can set the conditions where we compare the volume data for two particular candles over a given period of time, and see what's the what's happening on the volume front. At the same time, we also see what's happening on the price front, and then try to match the both the conditions and go for the fresh trade initiation. So that's on the chart. Now we head back to the Visual JForex board, where I will try to explain to you the customization of this indicator. We have to define these three input values. First is the instrument of your choice. If you want to work with the Euro USD, then you don't have to change anything. You can keep the Euro USD as it is. If you want to change the instrument, all you have to do is go for this listed instruments, and all these supported instruments are listed here. So any of the instrument can be taken. For example, we will change the instrument to AUD JPY. Okay, I think here we got okay. The AUD JPY is now the instrument of our choice for today's session. Then comes the period of the candlestick. Here we have to see what is the time horizon which we are trading on. If you want to work with the larger time horizon, then the period of candle should be higher. Daily, weekly, monthly will do the job. If you want to work with the short to medium term, then I think the time horizon till 4 hourly or hourly, starting from the lower time frames, will serve your purpose better. So, for example, we will make it 4 hourly. Shift is the loopback rate, whether you want to retry the prior period's data or if you want to work with the current data, you can simply define this parameter accordingly, and then you can do the comparison. You take a couple of volume indicator blocks and put different shift values while keeping the other variable constant, other input values constant, and then you get the similar characteristic volume data, but at two different point in time or at multiple point in time, and then you can do the comparison and see whether the volume is increasing, whether the volume is decreasing, or it is more or less almost flat. So depending on these three input parameters, we get this output value, and this output value then can be utilized to set the conditions. We also have to pay attention to the settings, whether we are working with the bid side or on the ask side. It doesn't really make much of a difference on the output value, but still, where you are doing the comparison, try to make sure that this is on the same side. Also, the applied price is not really important in case of the volume, so you don't have to be bothered about these setting aspects as well. Let us change the chart also to see how our combination will look like in real time. AUD is the instrument of our choice. The time period of candle we have chosen is 4 hours. Okay, so here we have these plotting, and here you can see after consolidation phase, this frequently we see spurt in volume, and that is indicative of the fact that after sideways momentum, the momentum picks up, and that is driven by higher contract turnover, higher volume data, and we can try to extrapolate it. We can try to use it with other parameters or other indicators, and we will have possibly good success ratio in figuring out the profitable trades. So that's it from my side for today's session. If you have any query or any idea to share, you can give me the feedback in the comment section, and I will be more than happy to take the discussion forward. Thank you all for joining in the session. Subscribe to the Dukascopy webinar channel and stay tuned for market updates. Goodbye.